Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over all of the data and information you need to know around AMC stock for the day today. Now, we got some news over this weekend that there's finally a film called Dune 2 that is starting to do okay in theaters. It's been a while since we've had a film do good. Really, I think the last film was Barbie and Oppenheimer that did any kind of real numbers in the theaters, which was months ago. So this could be a potential reason, if AMC stock is green, to why AMC stock is green to start off the beginning parts of the week. Now, we're going to have some other issues as well. Maybe some big issues out there that I will discuss in this video. Also, hit the like button, subscribe to the channel, let me know what you think about this information down below in the comment section, and let's get started. So, first up, AMC stock, again, over kind of the last couple of months, you've been really just trading sideways here. You haven't really been falling too much. You haven't really been rising too much, although it's felt a lot better. You've kind of just traded sideways over the last couple of months. That's probably going to change this week, for better or for worse. Now, I'm sure you guys already know the situation that is going on Friday. Semiconductors sold off. Nvidia, the notable one, kind of leading the way down, which is something you don't see every day. Well, Nvidia was down 5.5% Friday in regular markets. And then in after hours, yeah, it got even dumpier. Nvidia was down 2.77% in after hours on Friday, just continuing to fall. Overall, the stock lost over $230 billion of market cap value from the high of the day to the low of the day, not even including the move that you've seen in after hours. So definitely seeing semiconductors falling quite a bit. And there is a catalyst coming on Tuesday. That is the ARM lockup period. I think everyone's kind of anticipating that SoftBank is going to sell a lot of their position in ARM, at least a good chunk, and that could cause some serious selling pressure in ARM, and thus it wouldn't surprise me to see Monday also be a red day for semiconductors. Now, on Friday, you also had your non-farm payroll report as well as your unemployment rate that came out. It wasn't the non-farms that necessarily spooked the markets, in my opinion. It was that unemployment rate jumping to 3.9%. That is the highest level that we have seen in about 2 years. And the last time we were there, we were in a technical recession in January of 2022. Remember, Q1, Q2, there was a technical recession that happened during that time. So I think, simply put, the areas that were least priced for a recession had to kind of give a little bit of a breather and start to price in, what if we do actually go into recession? Semiconductors still are not going to do that great if we go into recession. Now, the biggest and most notable thing to actually point out about Friday is the momentum. The momentum got destroyed. And when you think about what moves a stock, what moves the stock in the near term is momentum. What moves the stock in the kind of medium, long term is earnings revisions, and, obviously revenue growth, right? Fundamentals. But in the near term, Nvidia has added over $600 billion of market cap value based on no new information. No new catalyst or fundamental news. It's just poof, added $60 or so billion of market cap on average every single day since their earnings. Boom, you're $600 billion higher in market cap for no real reason. That was momentum, and these momentum traders, they stay in with tight stops, and when the momentum shifts, they get out. Now, when you're disconnected so far from fundamental valuations, then that momentum to the downside, it can be pretty large, because one, fundamentally, let's say Nvidia is $600 per share fundamentally. That's a decent price to be buying the stock. Well, if you're at $850, maybe you fall to $600. Maybe the momentum takes you under fundamental levels, and that's just with momentum kind of going away. If you do see other events happen in the markets this week, that's also going to be a bit of a problem. Now, why I bring this up is because a lot of the money that has been in other areas of the market, small, mid-cap stocks, interest rate sensitive names, has really pooled into semiconductors like Nvidia, like ARM, like Marvell, like Broadcom, all of these other stocks, and it's left small, mid-cap, interest rate sensitive names. Well, if you do see semiconductors sell off, I would not be shocked if you've seen money go back into other areas of the markets, like an AMC for that matter. And maybe you could actually start to see more liquidity in other areas of the markets. And that could be very much a positive thing for AMC stock. So that is definitely something that I'm watching for. Not necessarily expecting this upcoming week, but over the next couple of weeks, I think that will start to have a positive impact to AMC stock. And I do think this can be a very positive catalyst overall because, I mean, let's be honest, if Nvidia falls, that's hundreds of billions of dollars, to go into other areas of the markets. You've already dropped over $230 billion from the high. If you fall, even more in this upcoming week, you're going to potentially lose hundreds of billions of dollars more in market cap value for Nvidia. And let's be honest, AMC with $1 billion market cap, it's not going to take a lot of money flowing into AMC to get quite a large rally in the stock. So definitely something that I'm looking forward to over the next couple of weeks for sure. So there is that. That's kind of my opinion on the semiconductor situation. It could cause, stocks in general, though, to fall, at least in the near term, as you kind of dissolve some of that upward momentum that was in the markets when everyone was so bullish. And now it's like, whoa, should we be this bullish? It really makes you kind of second guess yourself, and it can add a lot of selling pressure in our markets and downside, put exposure, which causes market makers to go out and start shorting stock as well. So there is that. Let's go ahead and take a look. The Ortex data here. So we do have short interest that continues to rise. I'll go ahead and update this to make sure we have the most up-to-date numbers. And you're looking at 13.09% short interest of free float, $157.78 million currently in short positions. Days to cover, 2.15, 34.3 million shares that are currently sold short. Shares out on loan, 45.56 million, 1.08 cost to borrow, 66.3% utilization, and 67.67 out of 100 for the short score. Now, if we take a look at option activity, on Friday, you did see one order totaling $12,000 with a positive order value of 0%. Yeah, that's nothing to even think about there. But the short interest continuing to rise. I don't necessarily think there's a lot of new short positions taking place. I think just a lot of the hidden short positions are starting to kind of leak through, as maybe there is some less of an urge, I guess, to say, to hide those short positions, right? If there's a lot of risk in the stock, and let's say the stock was 100% sold short, well, if there's a lot of risk that potentially you get blown up if the short interest is revealed as 100%, then maybe you're going to, hide a lot of those short positions via the options market. If, the momentum slows down, if there's bad news, if there's really a lack of positive catalyst, then maybe you can make the argument that you could just see some shorts, not buying that option to cover up their short position. That's more or less what I think is going on. Do I know for sure? Absolutely not. That's just my expectation. Now, on Friday, you did see costs to borrow fees around 8.5%. So there was a decent amount of shorting activity on Friday, that is for sure. Stocko tracker data is going to be shows a crazy week for this upcoming week as far as AMC option activity, really across the board in the markets. It's going to be a big week. The week of March 15th, you got about 4,400 calls currently in the money, 259,000 calls out the money. In the money puts at about 32,000, out the money puts at about 109,000. So on both sides here, tons of option activity. And, I would not be surprised to see a very volatile week that does come about. Now, let's take a look at AMC on StockTwits. Let's get a feel for how people are feeling on AMC over this weekend. Let's see. Sentiment actually a little bit better than yesterday, which is surprising considering today is a weekend day. Yesterday you were at 39, which was bearish, and today you are at 40, which is bearish. Message volume yesterday was at 52. Today it is at 49, and participation ratio is at 55. So there is a lot of people talking about AMC stock. So that is definitely positive as well. Overall, things look okay for AMC, despite, Adam Aaron really not giving us any reason to be excited about AMC, not giving us any reason for AMC stock to go higher. In spite of that, AMC stock doesn't look half bad, okay? The percent of stocks above their 50-day moving average at 56.85%. That was up 0.60% on Friday. And you also, again, I will point out, you had the Russell doing a lot better than all the other indexes. The Russell was only down 0.1%. The NASDAQ was down over 1%. S&P was down 0.65%. And the Dow was down 0.18%. Keep in mind, the Russell was up a lot and barely ended the day red. The NASDAQ and the S&P were up a lot in the beginning of the day and ended the day very red. So overall, the Russell held up a lot better. And I think that's the start of kind of the shift of capital from NVIDIA, from these other areas, large market cap names, back into small and mid cap stocks. And I do think that is a trend that's going to be with us for a while. That's not just a, here today, gone tomorrow kind of thing, but it could be a here today, gone tomorrow, gone the next day. And then you get 3 days of rotation back into small cap stocks. So it's not going to be parallel, just, in a straight line, whichever, direction, but there's going to be a lot of chop. But I do think the overall trend is more money is going into small and mid cap stocks. So let's be honest. If the consensus view on Wall Street is correct, that we're going to get a couple rate cuts from the Fed and we're going to have a soft landing, no recession, that is literally a recipe for small cap stocks to do very well. Yet recently, small cap stocks have been doing very poor. They're still down 20% from their all-time highs. If you look at the Russell 2000, that doesn't make a whole lot of sense to me. Okay, does that consensus change? Does it start to look like there's a chance of a recession? I think those are the things that we want to really be watching for. Coming over the next couple of weeks when we get more data, and especially in this upcoming week. So there is that. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.